How contributory do you believe fiscal policy was to the inflation that the country experienced over the past 2-3 years?
I think it was critical. I mean, if you rewind the clock back to the financial crisis in 2008, you had monetary policy wide open, but fiscal policy sort of petered out. And we had the defense sequester, and you had fiscal policy, which was basically absent. So you had monetary policy that didn't really contribute much of anything to inflation for a number of years. But then you fast forward to the pandemic, and you had this double-barreled approach where you had both monetary policy wide open and fiscal stimulus wide open. I mean, you're basically raining money from both sides. So the fiscal piece of this was one of the biggest factors. And it wasn't just one. It wasn't just, the CARES Act. It went all the way through infrastructure. And it seems to keep on going. And then including in that is also the tax cuts that came along with the Tax Cuts and Job Act, which came before the pandemic. So you had a lot of fiscal stimulus. And I think that is probably the largest contributor to the equation, because monetary policy is a little bit laggy. Fiscal policy is very quick. And so I think that is, to me, one of the biggest pieces. And I think
you can even go back and throw into that fiscal stew the 2017 tax cuts that took effect in 2018, and they ripple through the economy, as you know, at a lag. Maybe it's not the lag that monetary policy has, but nonetheless, it does take a while. And I would argue that the fiscal stimulus that was put into the economy in 2020 and to a lesser degree in 2021 was insurance to ward off potentially an existential risk to millions of jobs and the economy's ongoing strength as a whole. You talk about a fiscal cliff redux and how to avoid it. What do you mean by a fiscal cliff redux, and why is it an ominous prospect?
There are a lot of parts of the Tax Cut and Job Act that sunset at the end of this year. It's not as bad as the Bush tax cuts where everything just sort of reset. But there are critical pieces of this legislation, which I've been on the Hill a little bit lately, that a lot of lawmakers are very focused on. And there have been some bipartisan, workings here all of a sudden, which is actually positive news on some of the less onerous pieces of this, like extending the child tax credit or expanding it, going back to the bonus depreciation. These are very stimulative pieces. Those are direct payments to people, and also, allowing depreciation increases cash flows for investment. So that's important. But there's a much larger piece of this, which is Section 199A, which is the 20% pass-through deduction, and that's critical for small businesses like plumbers and electricians and things like that. That there is some movement on that, but that's going to be a bigger problem, because if you take away some of that pass-through deduction and increase taxes on small business at the same time they're paying higher interest rates, that's going to, hit the service side of the economy pretty hard. So that's something we need to get fixed, and get fixed quickly, because if we sunset and put everything back in the ordinary income tax rates for many of these service providers, it's going to change the job outlook. You'd reduce their profitability, you reduce the ability for them and the capacity to hire or keep current staff at certain levels. Yeah. So that's really important. I'm hoping that it will work itself out. I do see some movement on the Democrats' side. This was largely, the pass-through deduction was largely from the Republicans, but the Democrats seemed very, very interested in getting this done. So hopefully we may get, some of the, bigger pieces. We have the SALT deduction that is really a problem for the Northeast, in particular for lawmakers in the Northeast trying to get reelected. So I'm not sure how that one will work. Yeah. But on the pass-through deduction that actually affects the economy, I think we have a decent chance of getting that done. But if it doesn't, and we continue to have these, even this week, we have a CR, another government shutdown potential. We're just going to be rolling through these all year long. And that, to me, is way more important than monetary policy, because the Fed's told us what they're going to do. They're going to lower rates a couple times this year. They're not going to raise them any further. It's very unlikely they'll do so. That's a pretty good operating environment for investors. So that's why I think fiscal policy is way more important now.